every nation state's going to get exposure. And I think a good thing for Bitcoin is they're going to essentially lock it away and forget about it for a decade. I think that it's going to disrupt some of the financial tools that sovereign nations use against each other. And I think it's a good thing because I think it can reduce conflict globally. We have other sites that, are able to run fully autonomous, and we milk run them. And what I mean by that is we have employees that bounce between 3 or 4 sites, and they just kind of rotate through, because if you have your system set up right, you don't need someone's hands on them all the time.
This podcast is entertainment, not financial tax or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everybody, welcome back to the Bitcoin Frontier podcast. This week we have on Zach Bradford from CleanSpark. Zach, welcome.
Hey, thanks for having me. Looking forward to our conversation.
Absolutely, looking forward to this as well. I think when people think about Bitcoin mining, they think about it being very treacherous, requiring a lot of endurance, and because there are hard times. I know you follow the stoic philosophy. Can you kind of explain how that has influenced your leadership at CleanSpark, and just how you think about Bitcoin mining in general, especially through the deep dark bear markets that we've all been through?
Yeah, pushing through in that endurance is obviously a big part of what we do, because it's not, everybody loves a bull market, but the bear markets can get pretty deep. I think that if I look back at the different Stoic philosophers and which ones I think have inspired my view the most, is maybe one that's not talked about as much, and it's Cleanthes. He was actually known as the second father of the Stoic philosophy after Zeno. And he was known for his endurance because he was a water carrier. So what he would do is he'd work at night and he would carry water up and down the hills because, back in the ancient days, if you had a big garden, it got watered by hand. And so he was hired by people that had these big, great houses, and he went up and down the hill all day. And then he studied philosophy at night. And that developed his view on life was, it's worth it. So even when he didn't need to do that anymore, he did it anyway, because he felt that endurance and hard work were important. But it also, developed some of his teachings about, the concept that, rivers carve through rocks, that, trees bend and don't break. And I think it's the same thing. If you set yourself up well to be able to handle hardships and to be able to bend and not break. So if you look at what we've done as a company, we always try and be the forefront in mining on the efficiency side, so that even in a bull market, we're just fine. Even if power prices rise, we are just fine. And that's positioned us to be able to outlast bear markets, because if you look at the trends, and, I hope this doesn't repeat. And I think in the new normal, I don't think it will, but you basically are faced with 80% retraces at the top of the bull market peaks. And we look at it that way. Can we survive the 80% retrace and still be a healthy company and benefit when you have the bull markets where, Bitcoin suddenly goes up 20, 30, 40% or more in a short period of time? And all of that, though, comes into our people, which I like to comment on, I believe, are our greatest asset, because, ultimately endurance comes from within, whether it's external hardships, suffering, and this is one of Cleanthes' big things is we should all be indifferent to that. It's about how we respond to the hardships that matter, not whether they are or aren't happening. And so I think we've got this great group of employees that we built the company around that really believe in grit and perseverance is our core value to push through regardless of what happens.
Yeah, I really like that. How did you originally get into stoicism? What was the catalyst? Do you remember?
I actually, when I was in college, I took a bunch of philosophy classes just as it was one of those things. When I signed up initially, I didn't think I would be as interested. It was, you can take a philosophy class or you can take an art class. And I was like, I'm not a good artist, so, I'm going to pick the other one. And luckily had this great professor and learned a bunch of different things. But I think the reason I was attracted to stoicism is based on the perseverance, is based on, the way you deal with hardships matters. And so I think that's what ultimately attracted me to it. So,
Yeah, that's really cool. You brought up earlier about how you don't think maybe there will be 80% drawdowns again, like we've seen in the past many, many times throughout Bitcoin's history. I'm curious, like, what leads you to believe that that might not be the case going forward?
I think that there's just more Bitcoin than ever that is going to sit on shelves for longer periods of time, basically where the holders of that, whether they're the ETFs, and again, the ETFs can cut both ways in a panic sell, right? That means there's more Bitcoin, on an exit trajectory. But I think that there's just going to be a lot of very long time horizon viewers. And historically, Bitcoin's always had that, where, there's a corner of the market that has this very long time horizon and are, known as the Bitcoiners, or, we're all believers in it. But then there's the speculative part of the market. And that really ends up being what changes hands and draws the price down. I think that if there was a case of this big retrace, I think that you're going to see then these institutions or big investors that now have, interest and access, they're going to jump in before it would hit the same bottom. So it may be there's still a big retrace, but, as that, the fear and greed index kind of kicks in, I think it kicks in earlier on the retrace where people see it as an opportunity to accumulate Bitcoin. And so maybe it doesn't go full 80%. Maybe I think there's still going to be retraces. Maybe it's 40%, maybe it's 60%. I just don't think it goes quite as deep anymore.
Yeah, no, that makes sense. I think noted in your Twitter bio, I believe you have this quote that says strategy over ideology. I really like that. Do you think many Bitcoiners get tripped up over like ideology?
I think they do. And I think that, and what I mean by that, to kind of add some clarity, is as a business philosophy. As a publicly traded company, our job and duty is to create positive returns on a long-term basis for shareholders. And what that means is we can't be overly ideological about, many things that maybe a traditional Bitcoiner would do, such as, hold over all else. We've sold our Bitcoin down to zero before, and we're on a hodl trajectory because we think it's the right thing to do right now. And we could change that trajectory tomorrow. We're always very clear of that we want to view the markets on a real-time basis to create the best returns. Now, on a personal basis, I could handle everything completely differently. But regardless of that, it's important that we always have that viewpoint. But I'm going to take it a step further, because it could also be from a strategy or ideology point of view that our business plans need to change from time to time, grow faster, grow slower. We like to speak about the fluidity that we look at the market, because we think it's important to at times run and other times walk, because it's the right strategic decision. You can compare that with maybe some other companies that have an approach that is attract as many eyeballs at all times as possible, anytime, whatever the need. So it means their strategy looks to bounce around it all the time, but it's headline chasing, right? We want to deliver results. We're also not worried about a quarter over quarter. We want to deliver that on a long-term basis. So, all the time, everybody wants to say, hey, the stock price is down today. What are you going to do about it? We're not going to do anything about it. We're going to deliver long-term results so that quarter over quarter, year over year, we're delivering positive things, because we think that we're here to serve our long-term investors, not necessarily day traders. And we think that leads to a healthier outcome for everyone on a long-term basis.
Yeah, no, that makes sense. I was working in the Bitcoin mining space in 2021 and 2022, and I remember looking at CleanSpark and at how well you guys executed, the bull market and then the bear market, and capitalized during that time. How did you do that? Like, how did you know that, 2021 things were like really getting overheated, and then 2022 that was the time to like really dive deep and acquire some things? Like, how did you guys come to that conclusion both times?
I think it is just being real again about the markets and trusting your gut when you see things occurring. So, for example, want to say it was November 21, right before the drop, we saw an impetus, and it was actually in what was happening in the machine markets. We were watching billions of dollars being spent for machines that wouldn't be delivered for a year. And we not only didn't buy the machine, but we sat down and said, I think the market's hit that point of euphoria. And it's so euphoric that don't feel comfortable with what the risk is on the other side of that, because people are just acting irrational. And we saw it in one corner of the market. There'd already been a failure or two with, some of the Bitcoin loans and things. I think Three Arrows and a few others had already had their day. But at this point, it was just things were starting to build. We sold all the Bitcoin, and we sold it actually in the 60s. And it was like a month later, the market began to crash. And so for us, it was an observable, obvious thing to do. We took a lot of heat for it. And people, again, This comes down to the strategy of our ideology. People thought, you're a Bitcoin mining company, you need exposure to Bitcoin. What are you doing selling it all? Well, many of our peers, when they were now needing capital, had to sell it at much lower values. We then sold all of our Bitcoin as we mined it. But then we changed trajectory, about 18 months ago and started holding everything. So again, it's just looking at the market and saying, hey, when do we think the signals are going to change? And then behaving accordingly. The other thing is, again, it was always maintaining a conservative position. We didn't load up on debt. We didn't do all these things. And it left us in a stronger position than groups around us. And then you look at a lot of the asset acquisition that ultimately has underpinned what we've become today. It was a lot of distressed assets where the sellers, and it was still win-wins. They sold one site to us so that they could live the fight another day. On the other hand, with a different site, we didn't acquire whole companies, but we were just kind of picking the cherries out and saying, hey, it's either an asset that could be run better, or it's an asset that's now severely undervalued, and we think we can take a long-term push on it. So again, for us, it was the market signals. And again, it was a lot of euphoria versus where have we hit a bottom. And we didn't, try and change the HODL strategy when Bitcoin hit 15. We waited till it hit 27. So not only was it we saw signals, but we waited till it started to build back up a little bit.
Mm-hmm. Do you have a take on the market now? Is it too euphoric? Is it a nice middle ground? How are you guys thinking about things at the moment?
I said this a few months ago when Bitcoin went from 50 to 70 to 90 really quickly, November time period. And I said, I actually hope that, because I think it broke 100 then fairly quickly. I said, I hope it kind of settles down and builds a base. So I believe that's what's happening. Because I think if you look at the length of a bear market, it's going to be the more gradual the build in a bear, the longer it's going to be. I think the more rapid the spike, the quicker the drop on the other end, because it means there's a little bit more fast money playing. So I think that we're in an accumulation phase where there's going to be a tipping point, and we're going to see rapid moves as it stair steps up. But I think plateaus can be healthy. They're not as fun, but they can be very healthy in building stronger, more long-term holders.
Are there any points or signals that you'll be looking for that you'll see at some point in the future, and you'll be like, okay, yep, the market is way too euphoric at this point, and we're going to go back to more very conservative strategy?
You never know what it is. I think that when you see it, you know it. And so it could be an exchange taking too much risk. It could be too much rehypothecation of, other people's Bitcoin. It could be 100 different things that ultimately you see in the market. But I think whatever it is, our job is to try and know it when it happens and recognize it for what it is. I think that, what I'll say is we don't see anything right now in the market. Again, I think we're still in a building phase. And I think that what I'm looking for is the positive things. So, SAB 121, I've said multiple times, is the most important domino to tip. And that is where, financial institutions, it's going to be one of the best ways to open up access to others. that comes down to, again, maybe a way that Bitcoiners sometimes are too ideological. And that is, cold hardware wallets. 98% of people have no interest in that, right? But if you now open it up so they can click a button in there, you name it, major bank, and take 5% of their money and put it in Bitcoin, how many people are going to adopt the Bitcoin in a new way? And I think that's going to be a big impetus for moving the price higher, because it's just going to be easy. And the easier it is for people to buy Bitcoin, the more adoption we're going to get.
The rules of the game have changed. The first 30 days of the Trump administration have ushered in a massive shift in Bitcoin policy. Regulatory clarity is emerging, institutions are stepping in, and America could be on the cusp of a national strategic Bitcoin reserve. Join me for an exclusive online event with Connor Brown, counsel to U.S. Senator Cynthia Lummis, Preston Pish, and Matt Pines from the Bitcoin Policy Institute on February 25th at noon Eastern. We're breaking down what's changed, what's coming next, and how you can position yourself to capitalize. Don't get left behind. Secure your spot now. Sign up at unchained.com/2025reset. Again, that's unchained.com/2025reset. And now back to the show.
How do you think SAB 121 will play out? Like, do you think banks are like very soon going to be offering services that enable you to custody Bitcoin or borrow against your Bitcoin? Or do you think that's going to take many months or years to actually come to fruition?
I think you're going to see that some of the financial institutions have already been building in the background. They've been preparing themselves so that they can try and be a first mover. You're also going to see some that are going to hold out, say they have no interest, and it's going to take a change, whether it's a change in leadership at the bank or just ultimately they see no more value in holding out. So I think it's going to vary bank to bank. But I do think that you're going to see a few fast movers come out, and at least that's my hope. And those fast movers, the bigger banks, maybe the slower banks, are going to see what the financial implications of that were. How does it benefit the bank? And then you're going to see rapid adoption. I think a rapid way, a really easy way too, for some of the really large banks to do this is to acquire, an exchange that's already fully regulated, but maybe acquire it just to use the tools so that, it exists continuously as it was in one corner, and then the tools get implemented underneath the bank for their own customers in almost like a white label basis. But I think some of these banks have so much capital, they'll just acquire things to make sure they have a very rapid way to deploy.
I want to ask you about, Bitcoin mining in the energy industry. As time goes on, do you see that these two industries will really start to converge, and like global energy infrastructure will start to become very integrated with Bitcoin miners, or energy companies will become Bitcoin miners, or Bitcoin miners will become energy companies? Like, how are you guys thinking about that?
Yeah, and I think that we're at this impetus point where the push-pull is becoming very real. And I think we're going to see it over the next few years. But, there's barriers to energy companies becoming Bitcoin mining companies. And that's just, one, it's capital risk. Two, a regulated utility in a lot of states, not all states, but they have capped, profits. So, for example, I'm here in Nevada today, and NV Energy can't keep more than a certain percentage of profits. And so Berkshire Hathaway owns them. And so if their profit ends up exceeding a certain point, they have to rebate it to the customers. And so they are not financially incentivized to Bitcoin mine and take the capital risk that it would take. Although, of course, people would love to get big, rebates as a result of Bitcoin mining. They just lack incentives to do so. What I think you're going to see instead is, when it comes to buying peak capacity rates, the utilities don't really benefit. You usually have independent generators who service the peaker plants, and they basically end up with 5 or 6 windfalls a year, because in a lot of areas, the peak capacity, they only need it for 20 to 80 hours a year. And the rest of the year, the utilities basically have this sunk cost they fund into it. I think that Bitcoin miners we will be able to continue to educate utilities. We're already seeing this happen in certain states like Tennessee, where they really have leaned into understanding it and the interruptible loads that are that are offered on a tariff basis there for Bitcoin miners, where we just disappear. So instead of them having to buy expensive power that doesn't benefit their ratepayers, it doesn't benefit the utility in a financial way, they just avoid it because they can take a huge amount of capacity and just make it disappear. So they can make money on it for when it's readily available in, their normal power plants and generation capacity. And so I think that we'll get more and more integrated. Having been in the energy space, having spent time, in the first half of my career doing, renewables and microgrids and interacting with utilities, one, recognize how slow moving they are. But second, I see a future where every substation, everywhere has a small Bitcoin mine next to it just to maximize capacity coming off of it. There's a huge amount of energy in this country that essentially gets wasted, grounded, whatever it is, because we're so used to walking over and flipping the light switch. Excess capacity had to be there. In order to do that, though, the utilities have a ways to go on their technology to send signals back and forth, to interruptible loads to come off, come on, and make the best use. I think the integration is coming, and I do think that it will spread. And I can't think of a better use case than compute, specifically Bitcoin mining, to make that happen.
Yeah. So I guess, do you think that Bitcoin mining will eventually fundamentally disrupt, the power generation industry and the distribution industry and completely change it? Or do you think it'll always be this little niche thing that is kind of related, but not super, relevant for every generation company?
I think it will truly change the way that utilities interact with data centers. I really think that that's the future. It's a huge talking point right now. Traditional data centers, being a big amount of power that we have not yet, we don't have the capabilities to serve on a 10-year basis. The way to do that is to pair an interruptible load, a series of compute in Bitcoin mining, with something that needs to stay on 9 nines with your redundant, resilient power. The way to monetize and build infrastructure is going to be to pair those together. I think pairing them is the strongest way forward on an energy capacity point of view. So I think that you're going to see it truly change the way that utilities and power companies interact with that industry. Do I think it will spread further than that? I think over time it has the potential to do so. But again, I think there's a long way to go. I think you're going to see it there first, and then those concepts will apply in other places.
Mm-hmm. What's your take on the future of very large mining sites versus very small, niche mining sites that are, like you said, the kind of available at every substation? Are massive, huge mining sites, is that going to be gone in 20 years, or how do you see that playing out?
I think they're going to be far and few between. So, and we've already taken that approach. We have 31 different sites right now, as opposed to 1 or 2. We think it's not only more efficient from a growth point of view, we still have all the efficiencies because we use a think big approach. So we have a central NOC, just like a traditional data center would do. One of our sites has, around 40 megawatts running, and it only needs 2 employees on site. We have other sites that, are able to run fully autonomous, and we milk run them. And what I mean by that is we have employees that bounce between 3 or 4 sites, and they just kind of rotate through, because if you have your system set up right, you don't need someone's hands on them all the time. And so we think a distributed approach is already better, but it is better for grid balancing. If you think about how a utility functions, they have all these different substations spread out where they're managing all their generation and transmission in between. And what they have to do from a balancing point of view is they have to balance this half of their grid with that half of the grid, with where power is going. And there's a lot of waste that happens in that process. And so by spreading it out, instead of having just a single point of congestion where you take all the power and then you release the congestion and pass it down the line, it can happen at the community level. We saw this also play out with the hurricane that just came through, a few months ago. We were able to shut down in certain areas the communities benefit for the power. We were down for 3 days in certain areas and come back up. But because we had a really distributed system, Wyoming, of course, was unaffected and kept running. Even certain parts of the same state that were unaffected kept running. But again, we could benefit the communities in one area, benefit the business in other areas. So we just think distributed is the natural, better way to go for all those reasons.
Yeah, that definitely makes a lot of sense to me. I know some people talk about Bitcoin as like digital gold. Other people like Saylor might refer to Bitcoin as like digital capital with like a massive, multi-$100 trillion potential market. How do you think about, the future of Bitcoin? And like, do you think it could offer or bring some sort of like renaissance in the future or no?
I think yes. I think it can. And I think it can be the underpinnings of that. So, I think what we have to do is zoom out, though, because it really is truly a global currency. And there's going to be different use cases in different countries. And that's what's so powerful about it is, if you think of gold, it's really a store of value, regardless of where you're at in the world, because it's so hard to make fungible. You're not going to take slices off a gold bar to go buy your groceries, right? But it can be a store of value in a country like the US where it's really an investment grade asset. And in other countries where their local currency, has hyperinflation or it's just inaccessible to use a bank or the unbanked of the world, right? You can then use Bitcoin for that. So I think it's already causing a revolution in smaller pockets and areas than we're, always think about when we sit here in North America. But I think that it's going to build. It's going to continue to build. It may be that Bitcoin's the preferred basis of global settlement for oil, right? Because there's all these currency battles going on. And so if you're a provider, you just say, hey, I want to stay out of it, just pay me in Bitcoin, right? I think that it's going to disrupt some of the financial tools that sovereign nations use against each other. And I think it's a good thing because I think it can reduce conflict globally. And so if you reduce conflict, one way to look at that is, it's a key to world peace. And another way is it's just more efficient. So efficiency creates better things, better economic outcomes, less waste in the system, therefore, increases the livelihoods of everyone that touches it. So there's a million ways. I think it's going to have small reoccurring effects that build over time. And I think it's, here to stay in a real way. And I think that, argument is probably a foregone conclusion for most of your listeners. But when you really zoom out to someone who still hasn't ever touched Bitcoin, I think the ability for it to influence those lives, it just continues to build every single day.
Yeah. Yeah. On the idea of reducing global conflict, can you kind of dive deeper on like why you think Bitcoin in particular, or what ways that it might actually be able to do that in the future?
I think that nation states, and it's a tool, right? And it can be for good or bad. It's this, it can be weaponized, right? So, hey, because the dollar is so important to, some third world country, we now can influence policies, good, bad, and different, right? Or we can block trade in certain ways. If we de-weaponize financial systems and instead just incentivize transparency, I think it can't lead to anything. It just leads to something more positive. Again, reduces conflict. There's also a lot of countries that have nothing to do with conflicts with big countries. They get pulled into it. You look at what's happening right now with BRICS versus, using the dollar back. That's going to, that could build to something very negative for people living in adjacent countries to get forced into situations. And I think that having an alternative option, although I don't think it's a tomorrow option, I think that, Bitcoin still has to grow on the global scale, has an ability to be positive. You look at El Salvador and what they've been able to do. What they've really been able to do is get a greater sense of sovereignty. And now you see where, different organizations are currently pushing back to try and, erode maybe some of that. And they're going to have to contend with that in their own way. But I think it's just it's a small flashpoint where we get some insight into where things could be on a long-term basis. It's a grand experiment right now, but if it works its way through, and it may take a decade to work its way through, and it may be a different country that works its way through in a more concrete way, I think it just has potential. It has a potential to de-escalate a reliance on some of these countries bullying small countries around. So
yeah, talking about Bitcoin on a global scale, I saw Abu Dhabi just basically announced or was disclosed in filings that they own some Bitcoin ETFs, small percentage of their total portfolio, but it's something. Do you have any thoughts on nation states accumulating Bitcoin?
I think it's going to be an important reserve basis for every nation state to be exposed to, mainly so that one doesn't, surpass the other. That's going to be really what, from a power struggle point of view, is going to be, in the back of minds. If Bitcoin, quadruples, no one wants to be left out. But also, I think just on that basis that all of our countries are in debt to each other in, huge ways. And it's all measured in a baseline currency of their choosing, right? And it's different in different places. I think that this creates, Senator Lummis talks about this, in different ways. It could be the way to pay off debts. It could be, many different things. I just think that every nation state's going to get exposure. And I think a good thing for Bitcoin is they're going to essentially lock it away and forget about it for a decade. So when I see nation states acquiring exposure, I see that Bitcoin essentially not being part of the circulation. And again, so much of Bitcoin's price is supply and demand. So I think they're going to have a big impact on supply, therefore, hopefully, increasing demand, because its scarcity will be increasing. So again, I see it as a good thing. I think we're going to have to see how things play out, over time, but, we'll see.
Yeah. Do you think that, like Senator Lummis, like you mentioned, she has proposed the Bitcoin Act? I know that there's been talks about Trump doing some sort of executive order. It sounds like he had like some sort of crypto group. Whether that's happening or not, it remains to be seen. Do you think that the United States eventually will have some sort of strategic Bitcoin reserve?
I don't know. What is interesting is the number of states, though, that are starting to introduce legislation. And I think if that, I think we're in the high 20s right now, last I checked. If, 25, let's say, states go through, that means 50% of states are in favor of it. I think that's going to be a big indicator. I think just the feasibility of it, is what the new crypto czar was challenged to research. So obviously we'll have to see, what the feasibility is under different laws. I don't see why they couldn't, have something in there. But I think if states start to do it, the dominoes fall, because that will indicate, hey, if my state's in favor, the senators should then get behind it. And if you can do it at the congressional level, not just at the executive order level, I think it's a better thing anyway, because it's a show of, good government at that point. But I think that will be an indicator of it being more real. I think it's more likely that it will have to happen at a congressional level than just as an executive order level.
Yeah, I know. I've heard people talk about like the idea of ideally, as a nation, you would want to do it and not publicly announce that you're doing it, so other nations don't front run you. Like, if the United States does somehow pass the Bitcoin Act or something similar, does it really start to like roll downhill and really gain momentum at that point? Like, is that going to usher in like a crazy bull market unlike we've ever seen? Or is it still, it's just going to be like kind of people are going to see it and notice it's happening, but not necessarily, other stations are not going to fall as other dominoes down the line?
I think it depends on how it's implemented, right? If it was an implementation that was mandated to require a certain amount of Bitcoin every single month, or if it was just to establish it and on a best efforts approach, slowly build it over time with some target number over 5 years, I think the reaction becomes very different. So there's a mandated amount of purchasing that comes in. I think that triggers a big bull market. I think because, again, scarcity will just be known to increase. And if it's going to be treated as a strategic reserve, again, that's essentially coins taken out of circulation. And so I think that the implementation matters a lot. Because again, there's a lot of things that the government does. It says, hey, investigate this, hey, do that. And it doesn't move the needle because it's such a slow moving process. But again, I think that's the difference. If they mandate what the process is so that there's clarity of what's coming out of circulation.
Mm-hmm. Earlier, we talked about Bitcoin mining and stoicism. Are there any like general connections in your mind between like Bitcoin itself outside of mining and stoicism?
Yeah. So, a couple things. So, Bitcoin as a tool of financial freedom, I think when you look at this view that basically self-governance matters above all else, I think that the thing to guard against is becoming overly obsessed with what it can become, because then we can become enslaved to this, ideology of Bitcoin's going to save everything. Well, it is a tool for financial freedom, but I think not worrying about what the market does day to day. If you believe in it being a tool of financial freedom with your long-term outlook, but know that it on a day-to-day behavior basis, doing what an individual needs to do. Again, I hate the idea when people risk everything because they're like, this is the thing, I'm going to put 100% of everything I have in here, when they can't afford to. And so I think making sure you don't become enslaved to an idea that negatively affects your ability to be a positive individual. I think that for me is the ability to always look inward and not worry as much about the outward things. You can go into what can be referred to as, Bitcoin Twitter. And it can get toxic in bear markets in particular, right? And people come after each other. But I think that's people that get overly incensed and obsessed with the financial side of what it means. And again, it's about looking inward and investing in your character rather than just in Bitcoin. So I guess maybe I would look to it that way.
Yeah. Yeah. One thing that you mentioned earlier too is like you guys have a long time horizon. Like you're not looking at the stock price day to day. You want to deliver results quarter after quarter and year after year. How do you balance like, making results happen in the short term and then also, thinking longer term rather than just the day-to-day execution?
I think it's having that long-term outlook that, we do believe that the actions we're taking will result in returns to shareholders. Last December, we took an opportunity as it came up, and it was, we took a 0% convertible note, but we used a portion of that to buy the stock back. Well, we bought the stock back because we believe in ourselves. We believe that we were undervalued and we wanted to have a market impact on that. Now, whether the market reacted on that day or whether it reacts, later, but, on the basis of, if you think about timing, like we believe in timing a lot. And although timing may be popular, unpopular, it's about timing today results in a benefit in the future. So, we took a big risk when we acquired a large amount of machines last January, because again, we felt that the tide returns and costs of assets would go up. So we not only bought machines, but we executed options to buy more machines and tried to fix our pricing. We don't expect to be rewarded for that last January. We expect to really see the rewards of it as we have continued to build the fleet at a lower cost than peers to generate, better returns with more efficient machines. With that note and buying back the stock again, it's not that we thought it would change or that valuation that day, but when we then get to what I'll refer to as a better valuation or a more fair valuation, what we think we were worth, lower share count with the same market cap means it's higher stock price, right? It's just simple math that way. And so we're making a bet. We could have used some of those dollars to build a company, which we, of course, kept $400 million to build the company. We didn't buy Bitcoin with it, but we were going to instead build a company with it. But again, we still took a chunk of it and bet on ourselves. So, it's those decisions. We don't expect to, shock the world as we take them, but instead we're thinking a year out when the bull market is in full swing, where do we want the share count to be so that it impacts the shareholders the best?
Do you guys have like a performance benchmark that you guys are trying to outcompete? Like, is it a basket of miners that you're trying to outcompete? Is it the S&P 500? Is it Bitcoin itself? Or is there, you guys are just trying to do the best that you can day to day? How do you think about that?
We do track our peers, but we like to think about it as, our top 3 of 5. And what I mean by that is there's 5 metrics that we focus on, and we look to be the top 3 in all of them. And there's metrics beyond the 5, but our goal is not to be the best at a single metric, because that becomes ideological. And I'm going to give you an example. If you say, I must be the biggest, you're going to spend a lot to stay the biggest, and that can be capital destructive. If you say, I must be the most efficient, that could be capital destructive because it may mean that I'm rotating out of my fleet quicker than I should otherwise. Capital destructive again. So, but I'm a big believer that in every industry, there's basically 3 companies that will always prevail. And if you think about whether it's a cell phone company or the software company or an XYZ company, there's never more than 3 that are top of mind for people. And top of mind means more capital flows into it. There's always going to be a 4th that's kind of trying to catch up. But after that, everyone else is an afterthought. And so that's why we look at that. So, we like to be we're looking to be a top 3 in efficiency. We're going to be a top 3 in size. We want to be a top 3, in as many metrics ultimately as we can. And we think that's the right approach. So rather than picking and saying, hey, we have to outperform this group or that group, we're fine to let somebody pass us, especially temporarily, right? Because we're not chasing anyone. It's important that we're aware of our peers, but as long as we're within some margin where we can catch them, for lack of a better term, in the right markets, we're very happy with that position.
I've heard Michael Saylor say that like commodity producing businesses are just brutal competitive businesses. Like he had this story of when he was at DuPont that no one wanted to be a commodity business. Everyone wanted to be a specialty business. How do you think about like that when it comes to Bitcoin mining? It's like, it's obviously a very competitive business. How do you try to stand out from your peers?
I'm going to say something, especially in response to, Saylor's view on it.
Yeah.
And why would we go buy Bitcoin at 100,000 when we can mine it in our most recent report at 34,000, right? We're getting 3 times leverage by being a commodity business on Bitcoin. Now, it may mean that I'm not going to accumulate hundreds of thousands of Bitcoin all at once, but I also am not, if you think about how to make that happen, you have to take huge amounts of capital risk. And so, Saylor's model is take debt, leverage the debt, put it on a time horizon you think will ultimately allow you to exceed that. But then you're left with 2 options: sell the Bitcoin to cover your debts or refinance. And if you look at the plan that MicroStrategies, as I understand it, is laying out, is still just always refinance. The problem is timing doesn't always work that way. You're guessing on, a 3 and a 5 year time horizon about how these debts mature. And even if you're right 90% of the time, you can be wrong 10% of the time. And if that 10% is at a weak point, then you're in big trouble, right? So from a sustainability of our business point of view, we also prefer where we sit today. But I do agree. I think it's highly competitive, but that's why I think that it's important that strategy is the ruling factor, right? And, I've heard some of my peers when they say, we don't worry about timing. We just dollar cost average because that's the best way to approach Bitcoin. I think maybe on a personal basis it is. On a business basis, it means you're going to lose. And because if we were just going to dollar cost average in, everybody could just set up shop and just average in on a capital basis. And hopefully your entry point when you started was fine so that your average turned out better at the end. You have to be willing to take some risks. Otherwise, what's the point of the game, right? And as long as your risks pay off more likely than not. That means first, the decision was the right one. But second, again, that's how businesses ultimately succeed. You think of any business over the last, several decades that's turned into anything, we're talking about. There was an inflection point where they took risks, but it was a measured risk. Rarely do you have to, and I'm going to say that. It doesn't mean that you shouldn't. Rarely do you have to risk everything, though. It's just about taking incremental risks. I like to see us as a company that, wins the World Series with multiple base hits and doubles. We don't just sit here and swing for the fence, because if you swing for the fence every single time, it's just baseball. You're going to strike out more often than you actually hit the ball. So we would rather just take the easy, safer bets rather than risk everything all the time.
Yeah, no, that makes a lot of sense. If you could teleport yourself 50 years into the future, what's like a second order effect of Bitcoin or Bitcoin mining that a lot of people aren't expecting, but probably will happen in your opinion?
I think that there's a couple different ways to answer this. One is the energy topic, which we've already talked about. So I won't belabor that. But I think right now there's camps being set up on this store of value versus medium of exchange, and there's some entrenchment happening. I really think that the beauty of it is we're going to see it be both, right? Because so few people are going to own a whole Bitcoin in 50 years that sats is, we're going to measure everything in sats, And once we change that mindset, we're going to tap to pay in Bitcoin just as much as we're going to tap to pay in anything else. And I think that the interchangeability between fiat and Bitcoin will actually be more fluid. And a lot of people think, it's must be either Bitcoin is adopted and it changes all, or, fiat continues on the path it's going. I think that it's just going to be tap to pay, the same as you use your Visa, you're going to use Bitcoin. That's how I see it, because miners are already going to be so dependent on fees. I think that decentralization will continue to exist, but also I think you're going to see very large concentrations, because just like these big financial institutions that some of the biggest in the world, Visa, MasterCard, Amex, they survive on 1 or 2% fees, but it's this massive number. You're going to have, 10 companies that are the biggest Bitcoin miners that have developed at scale, and they now know very well how to survive on that. So miners, there's still going to be this pocket of 10 to 20% that is, very, very small miners. 80% though are going to be just gigantic names that, function that way. But they're also going to be operating on a basis of preservation of the system. And so there's not going to be this concern about taking over the network, right? By, collaborating in a way that would be against Bitcoin, because they would all sit there and shoot themselves in the foot. So I think that it's going to be this tenuous system that builds into something that people just kind of don't think about. And I think that's a positive thing. It's just this really great store of value that I also use at the medium of exchange. And it's as simple as that. It just becomes part of everybody's lives.
One more question on stoicism. What do you think Marcus Aurelius would think about Bitcoin today if he were alive?
I think that there would be a couple ways he would approach it. So, one of the things he talked about a lot was, or his basically three, there's usually four, but there's three that he focused on was, virtue, discipline, and then the impermanence of material wealth in those things. He was the emperor at this time where the Roman Empire was basically on the verge of collapsing and falling apart, right? And, there was famines and there was wars and there was all these things going on. And, his focus was on, again, going back to the self-mastery. True wealth was in self-mastery, not in financial speculation, not in chasing wealth, because he'd watched that corrupt everyone around him. So I think he shows up today, he has those things in his mind, and he advises people to invest in their character above all else, while seeing, and then reminds everybody that, power and greed can corrupt anything, even decentralized finance, right? So I think that would be his approach. That would be his advice on things. It's an interesting question to think about. Yeah. Because he didn't have it easy. So
yeah, it's a fun one. How do you think about like the terminal value or like full adoption value of Bitcoin? Like some people, like I mentioned earlier, some people think about it as digital gold, which maybe like a parity with gold, maybe like $20 trillion. Some people might think about it as a multiple of that. Saylor goes on to say like, maybe it could be like half of everything, like the 450 trillion that he's put out on his slide decks. How do you think about that?
I think it's somewhere in between. I think that if Bitcoin becomes like the core medium of exchange for global trade, you're going to start to think about it in percentages of GDP. It's going to be what is the global supply that actually changes hands, and it will represent, which again starts to look more like Saylor, and in his view, it's the multiple trillions. I think that has the potential to be that. If it becomes an option for global trade, I think that shrinks that. Again, it's still, now it's the option and it's elected as 10% of global trade is how it works. That's how you start to measure its value, which again is still in the trillions. So I think that it's significantly higher than it is today. And I think it's just about adoption and use. And I think it will become an important point due to its decentralization away from, sovereign nations. So,
yeah, I'm based out of Atlanta, and I know CleanSpark, like you said, you guys have mining sites distributed in many different places, but you also have mining sites in Georgia in particular, and also Tennessee and Mississippi. How did you guys like pick the Southeast to build a decent sized footprint?
First off, Georgia was almost an accident in the sense that, if you go back to the origin, when we were in the energy business, I visited the data center to talk about, adding generation on site to increase capacity. I didn't really know what they were doing when I showed up, but then seeing that the reason they want to produce an extra 0.5 megawatt is so they can mine more. And then you start to run the numbers. And when you've operated in a space where everything was about savings, and now you're talking about the revenue multiples instead of transitioning, and it isn't now a measure of how much can you resell power for, it's how much is Bitcoin worth. That's how we ended up in Georgia. We decided to buy the data center and go into it that way and went all in after, going down the rabbit hole there. But what it ultimately came down to as we expanded our footprint, and the reason that as part of our analysis, we chose to still operate in Georgia, because we could have said, hey, this is a great model, but we're going to go build it in a different state rather than acquire this site. It came down to operating in areas of abundant power, where the reason that power prices were low or carried less risk is because they'd built generation with a 50-year time horizon in mind instead of a 2-year time horizon or a mindset of scarcity. We were operating in California in the energy business, and everything is about storing power because it's really scarce and, the grid's a mess and nothing works. And then you come to an area where there's just abundant power. So abundance was our mindset going into it. And then really going into areas where abundance was even more prevalent in rural areas is how we expanded kind of on that wagon wheel mindset. So Atlanta was the center hub, and then we came out, pushed us out into Tennessee and Mississippi and elsewhere, where again, abundant power, where these areas were focused on over generation, and then they wanted to keep power inside the state lines because they're sending so much of it out. And when you send it out, the tax base doesn't benefit, the local citizens don't benefit. Georgia was also a big hub for carpets, and it still is. But all the factories that disappeared from the carpet industry over the years left huge amounts of power available. So every single place we've gone, whether it's Wyoming or Tennessee in particular, after Georgia, it's because there's abundant power. And there's two ways to operate Bitcoin mines in highly advantageous ways. And it's the Texas model with scarcity, where you basically exchange low power prices over uptime, and the abundant model where you'll take slightly higher power prices, but still great and low in exchange for having incredibly high uptime. And so we chose the uptime model of that. It's also an area that was being overlooked by the rest of the market. And it was being overlooked for good reason because, and we talk about this a lot, there's a very small number of hours a year you have to curtail in these states. And again, it's somewhere between 80 and 120 usually. And you can avoid 30+% of what would otherwise be your power cost because those spikes are so high. So you better understand the energy markets. You better understand how to manage around hour to hour pricing, which was what we did again in California, because we were doing it in California, minute by minute. And so coming into this environment, it was actually fairly easy to make the change. But if you mess up, it has ramifications, and we were very comfortable with interacting in that market and been very successful for, the last several years.
Yeah, that's great to hear about the footprint in Georgia. One more question, then we can start to close it out. What do you think is the biggest risk to Bitcoin?
I think the biggest risk to Bitcoin is, I don't know, that's a tricky question because I think it's so resilient. Let me start that way. The reason I think it's a hard question is I think it's so resilient because whether there is a geopolitical problem, whether there is an energy market spike that impacts mining, Bitcoin just continues. It's, TikTok, another block is, the saying, I believe it. So I think that the risk really comes in maybe over reliance on that it's going to happen regardless. It is, we need to continue to invest in the core developers. We need to continue to support that corner of it because so much of the rest of it is so resilient. But we can't forget that there's still, code that needs to be just taken care of and tweaked and managed. And we're basing on a bunch of volunteers that do that. And we're investing billions of dollars as miners in infrastructure every year. So that part's well covered off. It's all over the world. So again, that's well covered off that even if there was a geopolitical issue, it's just that underpinning that we have to take care of.
Yeah.
So everybody find your favorite nonprofit and, throw a few sats their way.
Absolutely. Well, Zach, thank you so much for taking the time to do this. Where can the audience go learn more about you and CleanSpark?
Our website, of course, cleanspark.com is where you're going to find the latest and greatest on the company. I'm not a big social media person because, again, I find that I'm so busy, but I occasionally am on Twitter, and that's the only place you're going to find me. So, or I should say X now. That's how far I am off from being on social media every day. But again, that's where you're going to see me every once in a while. But again, come check out what we do. I love to do things like this, and hopefully we can talk again soon.
Absolutely. Enjoyed it. This was great.
Yeah. Excellent. Thank you.